Hello and welcome to Find the Trend. My name is David and we have Mike here. Tesla is up more than 10% after hour. What happened?
So the reason Tesla jumped over 10% after hours is because the S&P 500 announced that they will buy Tesla shares. The S&P 500 is allocating 1% of their $5 trillion under their management to buy Tesla. That might not seem like much, but that's $51 billion. And because the S&P 500 decide to include it, institutions that follow the S&P 500 will be forced to buy Tesla stock because the index includes the stock. Not only that, S&P 500, including Tesla, is a sign from an extremely prestigious index that Tesla is a mature company that lots of investors should take a serious look at. Since the S&P 500 is an index, they have money tied up in other stocks, so they'll need to sell those holdings to buy Tesla. And since Tesla is a $386 billion company and larger than 95% of the companies in S&P's portfolio, it's also one of the largest additions in history by market capitalization. 75% of the stock market is index funds and institutional buyers, which are funds that follow the S&P 500, and then only 25% is retail investors, such as us. So having institutional buyers buy a stock can really move the stock price much more than retail investors. So even if you don't believe Tesla's fundamentals or their unbelievable lead in batteries, energy storage, and electric vehicles, it's clear that the S&P buying will have a material impact on the stock price and therefore valuation. So if we compare Apple's $100 billion buyback in 2018, at that time it wasn't well received by stockholders due to the company incurring debt to finance that buyback. And yet the stock still rose 27% between then and 2 quarters later in September. So at the time, Apple was worth $945 billion. But after the stock buyback was complete, in roughly 2 quarters, we saw Apple go to $1.2 trillion in terms of market cap, even though they only bought back $100 billion. Essentially, they added $155 billion extra in stockholder value just because they had $100 billion stock buyback, so a grand total of $255 billion. And suddenly the stock became more attractive to stockholders. Going back to Tesla, if the S&P 500 bought $51 billion starting in December, let's say it could double that impact to $102 billion, because now the S&P buying Tesla is viewed as more attractive. Tesla is not doing what Apple did in 2018, where they're incurring debt to buy back their shares. They're actually having the S&P buy the actual shares without any debt whatsoever to Tesla. Since Tesla's market cap is currently $386 billion, this means that the S&P buying would bring Tesla's market cap to $488 billion, or 26.4% more than it closed at on November the 16th. And that would be a conservative estimate, given how unlikely people are to sell their Tesla shares because of the S&P buying. For the contest on share price, this means that the share price would be worth $514.08 if the market cap was 26.4% higher. If anything, this solidifies Tesla as a company people can trust to reliably turn a profit and make a huge impact on the world.
All right, perfect. Thank you, Mike, for helping us understand what happened with Tesla after hours and what we can predict in the long term of Tesla. Definitely a strong company, and it definitely helped me, and hopefully it helps you guys too. If you guys have any questions or if you have any concerns, definitely leave us a comment down below, because Mike and I, we always read the comments. And thank you again for watching. Take care, stay healthy, and long live Tesla. See you guys.